Hello everyone. Welcome to the Stock Minds web channel. GitLab, NASDAQ, GTLB stands out as a leading DevSecOps platform in an era where software development is becoming increasingly AI-driven and security-conscious. The company recently reported its Q1 fiscal year 2026 earnings with strong revenue growth, improving margins, and EPS increase. For investors seeking a blend of growth potential and sound valuation, GitLab's latest results present a compelling opportunity. In this video, we will dive into GitLab recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About GitLab, founded in 2014 by Dmytro Zaporizhets and Saitse Sijbrandij, GitLab operates a unified, cloud-native DevSecOps platform that allows organizations to plan, build, secure, and deploy software in a single application. With over 50 million registered users and a presence in more than half of the Fortune 100, GitLab's all-remote model and global developer footprint underpin its agile, scalable infrastructure. GitLab financial performance. GitLab's Q1 fiscal year 2026 results, covering the quarter ending April 2025. GitLab reported Q1 2026 revenue of $214.51 million, marking a 26.79% year-over-year increase from $169.19 million in Q1 2025. Although GitLab continues to operate at a GAAP net loss, the company is showing meaningful progress towards sustained profitability. For Q1 2026, earnings per share (EPS) came in at -$0.22, significantly improved from -$0.35 a year ago, a 37.14% reduction in net loss. On a trailing 12-month TTM basis, revenue reached $804.57 million, a 29.31% increase compared to $622.22 million a year ago. EPS TTM turned positive at 8 cents, a remarkable shift from -$2.75 in the previous year. This 102.91% improvement signals efficient cost management and improving operational leverage as GitLab scales. GitLab's gross profit margin stands at a high 88.64%, consistent with typical SaaS industry leaders. The company also achieved a net profit margin of 1.62%, crossing into profitability territory and showing promising signs of sustainable financial health. Return on assets and return on equity remain modest but positive at 0.9% and 1.89%, respectively. These figures, while not yet high, underscore the company's progress in turning growth into earnings, especially given GitLab's capital-efficient model and lack of long-term debt, reflected by a no debt-to-equity ratio, indicating a debt-light balance sheet. Over the past 5 years, GitLab's revenue has been growing at a 48% CAGR. Net income has started to turn positive, while free cash flow has continued to fluctuate. GitLab Fiscal 2026 Financial Forecast. Looking ahead, analyst consensus estimates for fiscal year 2026 project revenue of $942.87 million, representing a 24.18% increase from fiscal year 2025's $759.25 million. On the earnings side, analysts expect a non-GAAP EPS of 75 cents, up slightly from 74 cents in fiscal year 2025, a 1.7% increase. This signals that GitLab is stabilizing earnings while continuing to grow its top line significantly. Market sentiment remains favorable, with analysts assigning a strong buy rating. The average 12-month price target is $63.22, implying a 53.33% upside from current levels. Notably, the highest target price of $85 reflects potential upside of 106.23%, suggesting that analysts see significant opportunity if GitLab's stock valuation expands significantly. GTLB stock price performance and valuation. At the time this video was created, the stock was trading at $41.23. Over the past year, GitLab's stock has faced a modest decline, with its share price dropping 8.8%, underperforming the S&P 500, which gained 10% during the same period. Since its initial public offering, IPO, in October 2021, GitLab stock has decreased by 64.1%, while the broader S&P 500 has risen 33.9%. This underperformance may seem concerning at first glance, but it also presents a compelling opportunity for long-term investors, especially considering the company's financial performance and valuation. From a valuation perspective, GitLab is priced with a trailing 12-month TTM price-to-sales PS ratio of 8.31 and a forward PS ratio of 7.22, which is reasonable for a high-growth software company with gross margins nearing 90%. Although the non-GAAP TTM price-to-earnings PE ratio is 46.85 and the forward PE stands at 54.78, these elevated figures are typical for premium SaaS companies that are in the early stages of profitability but possess significant expansion potential. Based on FinChat data, if we look at the valuation since 2022, the forward PS is significantly below the average. In May 2023, it reached its lowest level, and then the stock has gone up 150%. A similar scenario could be possible as GitLab's financial metrics continue to grow significantly. GitLab growth potential. GitLab's growth prospects remain robust, driven by several factors. 1. Customer growth and expansion metrics. GitLab's customer base continues to expand robustly, with the total number of customers generating more than $5,000 in annual recurring revenue, ARR, reaching 10,104, up 13% year-over-year. More significantly, high-value customers with ARR exceeding $100,000 grew by 26% year-over-year to 1,288, demonstrating strong enterprise traction. The company maintains a healthy dollar-based net retention rate of 122%, indicating strong expansion within existing customer accounts. This metric reflects that 80% of expansion comes from seat growth, 15% from platform upgrades, and 5% from improved customer yields. The total remaining performance obligation, RPO, surged 40% year-over-year to $955.1 million, while current RPO increased 34% to $584.8 million. 2. Market position and competitive advantages. GitLab operates in a substantial total addressable market estimated at $40 billion, with the company currently holding approximately 2.2% market share, suggesting significant room for expansion. According to Value Market Research, the DevSecOps market itself is projected to grow at a compound annual growth rate of approximately 29% through 2033. The company has been recognized as a leader by independent research firms, with Forrester noting that GitLab is the most all-in-one of the all-in-one solutions and suits enterprises looking to standardize with a single purchase. This positioning addresses the growing demand for platform consolidation, as 64% of organizations want to consolidate their tool chains and 70% report it takes more than a month to onboard new developers. 3. AI-driven growth strategy. GitLab's strategic focus on becoming the leading AI-native DevSecOps platform represents a key growth driver. The company has integrated AI capabilities throughout its platform with GitLab Duo, which includes code suggestions and chat features now available at no additional cost for premium and ultimate customers. Customer adoption of AI features shows strong momentum, with a 35% quarter-over-quarter increase in customers purchasing GitLab Duo for the first time. The company's AI strategy includes both immediate productivity enhancements and future agentic AI capabilities, with GitLab Duo Workflow expected to launch in winter 2025. Risks to consider. While GitLab looks like a compelling opportunity, we should be mindful of potential risk. 1. Slowing revenue growth. GitLab's revenue growth has slowed, with a year-over-year increase of 26.8% in Q1 2026, down from previous quarters of 29.09%. Additionally, the net revenue retention rate dropped from 129% to 122%, signaling reduced success in upselling and expanding revenue from existing customers. This deceleration highlights challenges in maintaining strong growth momentum and customer expansion, which may affect the company's future financial performance and investor confidence. 2. Cautious forward guidance. GitLab's revenue guidance for Q2 and the full fiscal year 2026 slightly missed analyst expectations, raising concerns about the company's growth sustainability. GitLab sees second quarter adjusted EPS of between 16 and 17 cents versus the 16-cent estimate and revenue of between $226 million and $227 million versus the $227.16 million analyst estimate. While Q1 results beat estimates, the cautious outlook contributed to a stock decline. Additionally, the gap still in net loss, underscoring ongoing profitability risks despite improvements in operating margins and revenue growth. 3. Intense competition. GitLab faces fierce competition from major players like Microsoft's GitHub and AWS DevOps tools. While GitLab offers an all-in-one DevSecOps platform covering the entire DevOps lifecycle, GitHub is widely popular with a strong community and a more intuitive interface. Failure to differentiate, particularly by enhancing AI-powered features, could threaten GitLab's market share as competitors continue to innovate and expand their offerings. Conclusion: GitLab's Q1 2026 earnings underscore its successful pivot toward profitability with a 27% revenue increase, improving margins, and improved EPS. While its share price currently lags behind broad markets, the fundamentals are falling into place: AI innovation, large customer penetration, and robust platform strength. Competitive pressures and execution risks exist, yet GitLab's financially disciplined, product-rich model makes it a strong candidate for long-term investment. But remember, this is not a financial advice. What do you think about GitLab? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching, and see you in the next one.